today and all things were looking pretty good, but not ending that way.
I think the key to today's trade was in the miners. We saw a big drop-off, and that was after in London we did see the mining sector down by 1.9%. We saw more developments during the Asian session, and the Shanghai rebar price down as much as 1.1%. And that's the lowest contract price that we've seen since the contract began in May. And really it was concerns of what we are going to see is a reining in of the shadow banking system in China, and those tighter conditions leading to lower growth, which impacted not only in the mining sector in the end, but the growth areas. We saw energy, the industrial sector, consumer discretionary, all finishing down in the red. But it was the materials which bore the brunt of the losses today, down by 1%. On the flip side, it was property which was the best performing, some takeover activity helping there. But altogether, a pretty disappointing performance for the Aussie share market. And technically, the next couple of sessions is going to be important as well. We're very close to the 50-day moving average, which is a support at the moment. 5,306 points is what we're watching. We managed to finish above it today, but of course reaching the lowest point that we've seen in 2014 so far.
Julia, in regards to China, the Shanghai rebar hitting that contract low, do we again start worrying about credit crunches over in China?
Well, we've been worrying about the credit crunch for China over the last month, where we have seen the 7-day repo rates being quite volatile. We're watching this very closely because, of course, we are coming up to the Chinese Lunar New Year on the 31st of January, and this is typically where China shuts down for holidays, but it's also when the Chinese take out a lot of money, so a lot of liquidity is needed within the system. So we'll be watching liquidity in China very closely coming up to those lunar holidays. But of course it is concerns that we are going to see tighter monetary policy in 2014, which is driving the fears at the moment. Now, we have seen weaker numbers coming out of China in 2014 so far. The services PMI, which was out yesterday, was very disappointing, and that had a big impact on markets. And of course the manufacturing PMI also having a negative impact on markets. So tomorrow is going to be a big day because we do see the Chinese trade numbers coming out for the month of December. We will be watching the export and import growth numbers. Both of these areas expected to see growth of just over 5%. But of course, if we see that coming in below expectations, that's really just going to stoke fears that we are seeing a slowing down.
At 9, Mike? Wow. Julia, your thoughts on whether sharp falls like this present opportunities?
I think it is an opportunity for the iron ore miners, and especially the bigger end, Rio Tinto and Fortescue in particular, because what we are seeing is an increase in output at a time when iron ore prices are still around 130 US a tonne, so still looking good. And while we are expecting iron ore prices to soften off, the increase in supply that we're seeing should mean that profitability as well as free cash flow really does increase for this mining space. So we are predicting that this is going to be one of the areas where we do see strong rates of profitability and growth coming through because of the increase that we are going to see in output from the big miners. So it's the big end of the market that I'd be focusing in on rather than the smaller end, the low-cost end like Rio Tinto and Fortescue, where the cost of production is falling. But altogether, this should be an area that bounces back. We've seen 3 consecutive years now where the miners have come under pressure because of low commodity prices. This is one year where we're seeing relatively good commodity prices in terms of iron ore prices, increasing supply, so we should see an increase in profitability this financial year.
It's been a topsy-turvy time for gold for seemingly a long time. It hit 3-week highs. What's the outlook? I mean, do you even dare trying to predict the outlook for this?
Well, given that 2013 was the worst year that we've seen for gold since 1981, you can see why a lot of people are cautious on gold at the moment. But it really is a drop in investment demand which has caused the weakness that we've seen in gold. We have a look at the physical side of things. It does look like things are picking up again, and this might be a short-term trade. So in the medium to long term, it's still being driven by what's happening in terms of the US tapering, the US dollar, and longer-term bond yields. But in the short term, the physical demand is quite interesting. We know that China's probably overtaken India as the biggest user of physical gold in 2013, according to the World Gold Council. And if we have a look at what's happening in China at the moment, we are seeing increased demand coming through from China ahead of the Lunar Festival that kicks off on the 31st of January. So we are looking for increased physical demand to be supportive of gold. We did see gold prices rising 0.2% in Asia, despite the metal prices going the other way. But despite this, gold miners didn't seem to be able to capitalize on that. We saw Newcrest Mining actually down by 0.5%. and the gold subsector losing 0.8% as a whole.
Listed gold plays. Speaking to Morgan's a little bit earlier, we were talking about gold. They actually made mention of a preferred play on it, albeit a rather small one in the small cap space of Beetle. A reasonably good day for them off the back of some production numbers.
Well, if we have a look at Beetle, it's low cost. There's an improving production profile. And if we have a look at the C1 cost of production, it's below 500 US a tonne. So even with gold prices around these levels, it's highly profitable. We saw a record December production coming through, and Beetle up by 0.6%, bucking that negative trend in that gold space today. And what we are seeing is their Duckhead project is performing. There's also some prospectivity to the Toscano project as well. And if we have a look at quarter on quarter, the September quarter, we saw an increase of more than 50% in terms of production, and the December quarter, we saw another increase of 10%. So we have seen a record quarterly production. They have still come in under their forecast for the half year. In December, they were forecasting between 120 to 130,000 ounces of gold. They've actually come in at 116,000 ounces of gold, but that's because the wet season did start early. So it does look like investors do like the Beetle story, and that's really because it is low cost. We're seeing an improvement in terms of productivity, and the gold grades here are increasing as well. So gold, in the short term, it might be a short-term trade based on the Lunar New Year. Medium to long term, we know that tapering is going to have a big effect here, but there are still some pretty good and attractive low-cost miners. Not a lot of them, but a few of them in the market. Beetle and Regis Resources, I guess, would be the two top